Good morning. Happy start to the week, and welcome to this new edition of the morning briefing. Let's get started right away, but it's a week that begins very, very busy. Immediately, in short, over the weekend there were no news, in short, or updates. Let's say of a thaw in this new trade war that has begun, which is why the markets have continued from where they left off on Friday. So with a gap open, I am very much a sell-off heavy. In short, if we look at the Nasdaq, in short, we have a close at 17,500 on Friday. It hit a low last night at 16,500, so already 1,000. This leaves you, in short, with the feeling of what we are experiencing. In short, these are truly momentous days. In short, the volumes being recorded these days, Friday, for example, in particular, are volumes that have never been recorded before. In short, declines with all these consecutively, with these significant declines. You have to go back to 1929 to find something like this. And so, in short, this should make you understand the magnitude and importance of the movements we are witnessing. We are also witnessing a bit of a flight to quality, so a shift from equities towards, in short. The bunds, however, here too, there's the flip side of the coin, because all these rates are obviously pushing towards in short, inflation will certainly push inflation, and therefore central banks will probably have to intervene with targeted measures to contain it. In short, indeed, this inflationary push, which will obviously stem from the whole situation of the trade war, and therefore also for the bund. In short, it becomes, well, a bit dangerous. It is truly a rather complex situation we need to navigate by sight. No one really has an idea of where it might stop, even if it does, what we are witnessing. In short, a sell-off that frankly does not give us the feeling of being over, to be completely honest. We will see what the developments are. In short, I repeat, but always with utmost caution. In short, we are witnessing days of monstrous volatility, so please be careful. Reduce the size to a minimum. Look for operations. In short, only those that are truly well considered try, in short, to be attracted by the large market volatility, which, in short, can certainly, in short, lead to temptations, perhaps with the illusion of easy gains. But in short, in the same way that you can easily earn due to high volatility, you can also lose. So maximum attention and caution. Let's take a closer look at what happened. It doesn't make sense to look at the 5-minute chart with these 400, 500 point gaps at the moment. Let's take a look. For example, the daily chart of the Nasdaq, starting with the Nasdaq. Okay, in short, we are below that level we had indicated, which was the area we had pointed out. We are working below it. The next target could easily be this area of 15.3, 15.4, which, however, are, so in short, a really concerning situation. Even though at this moment, the European markets have opened, if the decline is a bit delayed today on the schedule, because I have a problem with the broker that doesn't let me see real-time data. It doesn't connect to the trading view. So I had to make an enormous effort to extract all the levels manually, do all the calculations. So I am frighteningly about 2 hours behind on my personal daily schedule. And so, as we were saying, these are quite concerning situations. If we look at them in detail, we are working at the moment. A bit, I repeat, in short, I am about 15 minutes behind. You see, there's the DD wound up here, because in short, it's giving me this problem right now. Simuchi, if maybe someone else had it when you listen to the video, in short, maybe they would want to tell me if they have the same problem. I made a request to the broker, but they haven't responded yet. Obviously, we will see. So, as we were saying, we are working on these levels. BC3. In short, below SD1 of 1, there's an attempt to recover maybe by HV. But in short, let's say that at the moment there's that gap left open. Let's say that the range between 17,100 roughly and 16 and 5 should be the range at least for the day. In short, as we see, it has moved precisely in this direction. If we also look at them, it probably has. Did the same. Here it is. So these are the ranges to watch. Obviously the break. In short, the level of closing this gap could provide the boost for an upward push, obviously. In short, frankly, I don't expect it all summer. We'll probably wander around in this wide range, which then in short is very wide. On SP, we're talking between 5,000 and 483, 1570 points. SP range, very high, so maximum attention. Let's also take a look to the other American futures, which also in short from Johns and Russell, who are also in short, obviously battered by this widespread sell-off. I repeat, in short, even ASA, no one is excluded at this moment. This is the Dow Jones. Here too, we are between 37. We have this range of 36 and 7,100 points of range at this moment. So probably in short, we will work within this range. The breakout in short from one of the sides in short, this is not just to be monitored as the same thing. We can go and look. The Russell 700, 1790, 700,000 and 790,000, roughly with 1710, 80 points. In short, all very broad movements on which one can work comfortably. The important thing is to be cautious in choices. Frankly, probably favoring the short side in short is certainly more advantageous from the point from the primary trend. In short, it seems unnecessary to reiterate. It seems rather triggered and strong and decisive. So this is a directional operation. Frankly, I try to operate in the short direction. I might also be tempted by some long positions, but in short, just the bare minimum is necessary. But I try to work on the short side in such a situation that seems obvious to me. Let's also look at oil, which has also opened with a nice gap downwards. Here too, we are now working around 59.50 levels, unimaginable 2 weeks ago. So we probably always monitor the range. It really leans too much on my minimum range, so 58, 59, 61, 15. This is probably the range. Even though here the trend is even more clearly downwards, in short, it continues to slide with all the recession fears that, in short, we have encountered. In short, they seem to be manifesting themselves more insistently. Let's look at gold, which, in short, has pulled back a little from the highs recorded. In short, it was to be expected, and in short, at the moment, in short, this was the design of the second retracement of the second shadow. In short, once completed, it even smudged a little. Now we are working back into it. I have to put it on a time frame of the daily. Here it is. So this was, let's say, the retracement up to where the retracement was not expected, in short, which went more or less here in this area here. So around 3,000, it might start again. In short, a movement in short, maybe to make a new high for SPX. In short, a similar situation. Let's always look at the 4-hour chart. In short, which we are updating step by step. Here it is in short. The situation seems to me quite clear. In short, we are below the target of the second wave that we had indicated reached indeed on Friday. That is reached and even surpassed on Friday. With these prospects, probably the opening is with my cat joining us on playing. His name is Fox. Yes. And so in short, also downwards. Here, the situation is quite compromised. In short, it was the soul. It was the soul. It was the soul. With a very, very strong trend. Let's say 49.50, 48.80, 4.7. 4.7 and 70 are the next targets of these never events. With this, of course, we have reached the end of this morning briefing, which I have shortened a bit because I am running very late due to these connection issues. As always, I invite you to leave a like on the video, exercise maximum caution, and we'll catch up later in the chat. Thank you all for your attention.